Good afternoon. It's McCollum on Business Tuesday edition here. Appreciate you joining me as I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We got a weak picture of the economy today in terms of the jobs figures. That was delayed here with the government shutdown. Talk about that coming up, what the market's doing with the Market Watch. Local, national stories we need to know, and of course, stocks we're paying attention to today as well. So appreciate you joining me, and let's get it started with that Market Watch. As I said, the jobs figure number, it's not a good economy out there, at least in terms of that perspective, and everything on the market is down today. And then you got the AI concerns that's been plaguing the markets for the last several days also out there. Right now, the Dow Jones is down 456 points to 47,985. The S&P 500 is down 55 points to 6765. And then the NASDAQ, 117 points down to 22,939. And then the Russell 2K, that small cap index, down 16 points here today. 2509 is what that is trading at, being down today as well. The one, I guess, good side here, it's not an index, but a cryptocurrency. Well, Bitcoin is up today, 970 points, but it is still trading under that 90,000, 87,388 as of right now for that cryptocurrency, Bitcoin, out there. So, look, it's been a struggle here in this middle part of December with the AI concerns. The hiccups. And then also now this jobs report coming out. We'll have that story on the jobs report coming up in just a moment. But first, stocks we're paying attention to right now. Pfizer's the first one we're going to look at. They're a big pharma company out there. You guys know Pfizer. 4.98% down as of right now. Yeah, they came out with their disappointing 2026 earning guidance in the eyes of investors out there. Pfizer forecasted an adjusted profit ranging from $2.80 per share and $3 per share is what they adjusted it down to as well. And that's for the coming year up, right? 2026. Analysts were expecting at $3.05 per share for 2026. So they moved it all the way down to, $3 is the high end that they moved it down to here. Revenue for the period is anticipated to range from $59.5 billion up to $62.5 billion. Well, that would be little change from the company's current year 2025 sales forecast. That was at $62 billion. So they're even saying their revenue next year is going to be equal to 2025. Earnings per share is going to be less. Well, that's why Pfizer's down here, 4.96% here today as well. Look, you adjust that stuff down and your stock generally goes down out there. Next up, we're going to look at Circle Internet Group. We haven't talked about this company in a little bit here. Of course, a new company here on the stock markets. They're the stablecoin issuer that had their IPO a few months ago. Well, they're up big today, right? 8.23% as of right now. This was the stock that when its IPO came out, it skyrocketed up into the stratosphere here. Came back down to earth a little bit. Kind of held this $80 range roughly over the last off and on, $80, $75, $80 range since that initial blip and come back down. But why are they up today? This 8.36%. Well, Visa announced that that Visa and their acquirer partners, they can settle transactions with Visa in Circle's USDC. So that basically means it's a stable coin and it's pegged to the US dollar as where it is with Circle Internet Group, specifically with Visa. So Visa shares were unchanged in this deal, but as you can see, Circle Internet Group up 8.22% as they're got kind of quote unquote in business, right, with a large mega company in Visa out there. And then we'll look at Southwest Airlines. Holidays are here, things are changing a little bit. Well, Southwest Airlines is up 1.13% right now. Was up over 2% earlier today. Well, they did touch a 52-week high as well. Barclays, that investment firm, upgraded Southwest Airlines to overweight from equal weight. And they said specifically Southwest stands to benefit from a material upgrade in commercial strategy. Now, they wrote that in that research note with the announcement of the upgrade as well. They also said that Southwest Airlines, it's a top idea for 2026. So, and we know a lot of people are on board with the Southwest changes that they're making, and assigned seating, charging for certain seats in the cabin, etc. People are on board with that, and there will be an initial revenue blip here for Southwest, but coming up here, and Barclays kind of agrees with that theory that we have out there on them. When we come back later and look at stocks, we're going to look at some energy stocks out there: Halliburton, APA, two of them. Something big's happening here with U.S. crude oil and the energy stocks. We'll talk about that coming up. And then, of course, my favorite company, I use it a lot, Estee Lauder. We'll look at that makeup manufacturer, cosmetic, I guess, company coming up here later on as well. But first, let's get into that jobs report that was released earlier today. Now, the United States, well, as a whole, the economy's been up and down and unsure of, right? We know consumer confidence and low and stuff like this. And reports like this just aren't going to help that sentiment, right? The U.S. did gain 64,000 jobs in November, but it lost 105,000 in October. And a lot of that 105,000 in October was because the federal workers, weren't around with the cutbacks by the Trump administration, effectively going into effect from earlier this year. But then also kind of that, government shutdown deal kind of moved it into that side as well. So now these are delayed reports, obviously, because we're into December here, and with that government shutdown. The other side that came out of this, so those are shockingly no numbers. And then the unemployment rate actually rose. It rose to 4.6% last month as well. That's the highest unemployment rate since 2021 at this point. The November job gains, they were higher than the 40,000 that they were expecting, the economists were expecting. The October job losses, well, they were caused by that 162,000 drop in federal workers, many of whom, if you remember, resigned at the end of the fiscal year in 2025. That was September 30th is when they did that. That was from the Doge experiment that happened earlier this year out there. Labor Department revisions, they knocked 33,000 jobs off of August and September payrolls. Hiring has clearly lost momentum. Since March, job creation has fallen to an average 35,000 a month. That was compared to 71,000 in the year ended in March at that time. So we're seeing a weak jobs report out there repeatedly. Now, could this be affected here? Obviously, holidays are coming up. We'll see how that affects everything. And we know people are closing down jobs and laying people off. But we're getting jobs as well. So we'll have to see here as we get back into normal announcing. But that number is kind of what's shocking the stock market here today to kind of be what it's doing. Is it everything is down as we go on? And now let's focus a little bit more on, in terms of what the economy is doing for personal bank accounts, for instance. And this came out here earlier today as well. And this is concerning because 14 of the largest U.S. retail banks, well, they posted jumps in the income that was generated from overdraft and bounce check fees, folks. Yes, this is becoming an epidemic out there as well. And this is numbers from the first 9 months of this year, 2025. Two banks, they did report sharp declines in these fees out there, and this is all from Reuters. They did a big analysis of these banks in their reporting. The data reveals growing industry divergence on such fees. This is obviously is at a time when broader economic and regulatory shifts do make it more likely consumers will encounter these fees. You get paid on Friday, you charge something Thursday night, and it goes through quicker than you think it will, right? It also highlights that some banks still rely on overdraft fees and as a huge fee in their bottom line. And that's despite the industry promises to rein in those fees following political pressure, specifically during Joe Biden's administration last few years. Reuters did announce or did analyze this data, as I said, and it was specifically on overdraft and those NSF, right, non-sufficient funds charges. And they did it for 20 largest U.S. retail banks that report collecting such fees to the Federal Financial Institutions Economic Examination Council is actually what it's called. That's a regulatory panel that oversees the banks, and that's where we get these figures from. Or Reuters did get those figures from. The 20 banks, well, they represent nearly half of all deposits as insured U.S. banks. So we're talking a big number of banks here. I know it's only 20, but in terms of the volume, it's the major ones out there. So the overdraft and NSC fee income for the group, well, it ticked up 2% overall. $2.99 billion dollars for those top 20 banks in terms of those fees collectively. The charges mostly relate to overdraft fees, and that's simply because banks have phased out the NSF charges in recent years because you just decline the charge, right? As what you do at that point. But 2.99 billion up 2%. So a lot of it is regulatory and how the banks do stuff. The other part of it is just the economy right now when you just swipe something because you need it and it goes through and your bank goes negative at that point. But staggering numbers there as that continues to go up on those fees. And those aren't cheap fees either. 35, $45 I've seen out there as well from the reporting. Now let's talk a little bit about retirement here. And I'm kind of I'm at the end of Gen X here, born in 77. But some of the Gen Xers are turning 60-year old. The first ones are turning 60 years old this year as well. And interesting here because there's some experiments been run here on us Gen Xers. And the interesting part of it is fears of a future retirement savings shortfall. It's finally caught up to Gen X out there. As they're, like I said, some first wave are getting to 60 right now. So decades of kicking retirement savings down the road, well, it's coming back to bite a lot of these Gen Xers, especially the older ones. There are two new surveys, and they zero in on how much Gen X is kind of fighting over this right now. And they're in it. Their Gen X is in a little bit of a mess, but also how they're taking steps to get themselves out. Two new studies out. So here are the numbers. More than 8 in 10 are worried that they will not have enough money for a comfortable retirement. And this is according to Schroeder's 2025 U.S. Retirement Survey. That provides an exclusive first look at the report to Yahoo Finance, is where we found this from. On average, Gen Xers expect to retire with $711,771 saved. That is below the estimated 1.2 million that Gen Xers believe that they'll need when they actually retire to make it through till the end of life, right? Gen X was the text generation for employer provided 401k plans, and they emerged just as Gen X was entering the job market back in the day. Gen X is also operating with high levels of credit card debt, and even though student loan debts became a big deal, they got more expensive, which, makes retirement saving one of the numerous big priorities and pressing priorities that Gen Xers are facing. Among those currently participating in a workplace retirement plan, nearly one quarter of Gen Xers borrowed from their account. That was compared to 17% of millennials, 21% of baby boomers. Like I said, according to that Schroeder's data. These numbers are staggering out there. The top three reasons were paying for to pull out of the 401k. The top three reasons: paying for unforeseen family or personal emergencies, paying down debt, and then keeping up with the increasing cost of living that's happening to all of us out there. So Gen X workers, well, they're in their highest earning years. Obviously, as you get older, you get into higher earning years. So pumping up retirement savings with catch-up contributions, that can help you. And Gen Xers provide a significant boost in their savings. Combine that with their drilled down focus on budgeting to spotlight lifestyle creep, as they call it. That due diligence exercise is the best way to trim spending and free up money for additional contributions moving forward. And Gen Xers are moving into that style to kind of to make up that savings amount as well. Some are even working, know they're going to have to work longer years, right? Couple, 2, 3 extra years to help that out. Then also, there's another new study out there published by Nationwide Retirement Institute, and also the Harris Poll is involved in this. The majority of non-retired Gen Xers surveyed did not view retirement as an urgent priority until age 50 or later. Yeah, waiting till late in life to start retiring and saving that money. That said, Gen Xers are now cutting discretionary spending and even increasing retirement contributions now. So about 15% of Gen Xers now plan to retire later than they originally hoped. 26% believe they would need to return to the workforce within 12 months if they retired today, all because of inadequate savings over the years. So give you a little snapshot here. Maybe you're in this Gen X group, as we are all getting older here and everything. But so if you're a younger Gen Xer, like I am, right, I'm 48, well, maybe it's time to start doubling up that retirement side and things to that effect here to get ahead of it. And the older ones are kind of running into this right now as well. So bring that to your attention and more stress on you here during the holidays, right? I don't mean to do that, but at least we're not Ford Motor Company, right? Ford Motor Company is pivoting away from a very ambitious electric vehicle plans that they came out with over the last several years. They're having major financial losses. And then, of course, consumer demand just isn't there for the EV side like they all anticipated it would be, with some government help there as well, right? They did a big, huge investment in more efficient gas engines and hybrid EVs, and it's not helping the Ford Motor Company at all. Yes, so Ford came out yesterday and they've said they poured billions of dollars into electrification along with most of its industry peers. GM had a big write off earlier this year as well. Ford even announced that they're no longer going to make the F 150 Lightning electric pickup truck. No more. No more production on that coming up. Instead, they're going to go for an extended range version of the vehicle. So what's happening now in the automotive industry? Because the Biden administration wanted everybody to go electric, didn't catch it caught on, but didn't catch on at the levels and the expenses to do it was high. People are going to go back to, and I've been advocating on this for years. I have two hybrid vehicles, and then of course my electric one. Everything should be a hybrid vehicle where it goes on electric battery power when you're going slower on city roads or at stoplights, and then gas powered after that. You get 50 plus model ranges on that. That's the way every vehicle should go instead of full electric or full gas. But I digress. The car dealerships are coming around now, it looks like. Ford also will introduce some manufacturing changes over at its Tennessee Electric Vehicle Center. That's part of the Blue Oval City campus, and it was the future of Ford's EVs and batteries and things. Well, it's being renamed the Tennessee Truck Plant. It's going to produce new affordable gas powered trucks instead of those EVs coming up. Ford's Ohio assembly plant will actually produce new gas and a hybrid van. The company has lost $13 billion on EVs just since 2023, folks. They said they expect to take a $19.5 billion hit, largely in the fourth quarter, due to that EV business out there. And yeah, I said due to. Due to is what I should have said, not due to. Yeah, it's big losses here for these companies buying in and going fully electric that they were all headed towards. Ford said it now expects half of its global volume will be hybrids, extended range EVs, which also incorporate a gasoline powered engine in them. And, those are the plug in hybrids, for instance, and even full EVs by 2030. And so they expect that half their global volume, hybrids specifically, which I think most people would buy into, extended range EVs, and then the full EVs. So half by 2030. Right now, it's 17%. So they have 5 years to get that flipped and go. And you make more hybrids. I'm telling you, people will buy hybrids. Yes, it's electric. It doesn't have to be plug-in, just regular hybrid. I don't have a plug-in hybrid. It just goes off of battery power, when you're going slow in like neighborhoods, for instance, or at stoplights. It extends out that obviously the range there to 50 plus, and I think that's more of the future than a full electric vehicle. Until electric vehicles, trust me, I know I got one. Whew, until you get the range and also the fear of it, and also just the hassles of those electric vehicles that you kind of run into from time to time out there. Hey, it's Christmas time. You probably have your tree. I'm going to assume most of you have it up. I haven't put mine up yet either, but if you're looking to buy one of those fake trees out there, well, prices for them have rose 10 to 15% just this year alone due to those no new import taxes. This is according to the American Christmas Tree Association. They're a trade group out there that monitors this stuff. Tree sellers did cut their orders and paid higher tariffs for the stock that they did bring in. Despite those issues, tree companies say they aren't likely to shift any large scale production back into the U.S. to get around the tariffs, for instance, right? They make most of the fake trees over there in Asia, if you didn't know. These fake trees are labor intensive and require holiday lights and other components the U.S. doesn't make. So all those components are made over there, and so they just put the whole trees together over there as well. And these people sell millions of artificial trees each year, these companies and stuff. And they're getting them all done over there for those reasons. Kind of shockingly on the reasons as well. About 80% of the US residents who put up a Christmas tree this year, well, they plan to use an artificial one out there. And this is according to the American Christmas Tree Association. That percentage has been unchanged for at least 15 years. So, large majority go fake. And I even finally gave in and went artificial over the last few years as well. Reason why? Well, there's several reasons why, right? You like to set up your trees on Thanksgiving. You leave them up for weeks, obviously, until after Christmas. And well, that dries out fresh cut trees, and it's a bigger hassle, house fires, for instance, stuff like that. But then also, you can be allergic to mold spores on real trees, or just don't like the overwhelming smell of the pines. You have a cat that takes down your tree, so you want to go artificial, right? From that side out there. So the other thing that I like about it is all the lights are already strung on them, right? 80% of the artificial trees, I keep calling them fake, but the artificial trees sold each year, they have the lights already on them, right? Less of a hassle to put up these artificial trees as well. You can just put your little specific ornaments on there. So that a lot of people switching to, artificial for that reason as well. So back in the 1990s, a lot of the artificial tree making and putting the trees together to be sold. Well, it shifted away from the U.S. and it first went to Thailand, like I said, back in the 1990s, and then it went about the early 2000s. It moved over to China at that point. The winding lights around the branches is time consuming and tedious, according to the manufacturers. So that's why they moved over there. And now with the tariffs, they're 10 to 15% higher. The choices we have out there with Christmas time, right? It's kind of an amazing story to deal with. When we come back here at McCollum on Business, we keep this going. We're going to look at Halliburton, some energy stocks. Halliburton, APA, Estee Lauder, cosmetic company out there. We got some follow-ups for you here as well. Grand Canyon South Rim. Well, water's back on there with this piping. We'll give you the update on that story coming your way here when we come on back. A couple other local stories as well you want to know. And you want to live someplace not expensive in the valley? Well, I got at least 3 cities you don't want to look at. We'll talk about that and more. Come on back, folks. I'll call them on business. And we're back here, McCollum on Business, of course. Tuesday edition here at Robat TV as well. Don't forget, you can catch all of the production shows here at Robat TV on demand right now. They have their own channels. You see them on the front there, including The Real Matrix, which comes out with a new episode every Wednesday at noon. This week's episode coming away. We're going to do a holiday schedule here coming up with, of course, Christmas and New Year's next few weeks is out there. So we'll put that out there, but 11 episodes are up. Catch it on demand now at Robat TV. Of course, you can get it on the production page on the YouTube page as well for our production company that we work out of here on. Of course, free podcast system as well. Just search The Real Matrix on your favorite podcast system. Comes right up for you. The Angry Patriot just hopes that you come in and come in with an open mind and look at his programming and his show. And if it's something that interests you, catch it and listen to it and see what he has to say out there. And of course, you got the main event. We got that in the can today. Bruce Cooper, of course, 34-year legend there at Channel 12 in terms of sports reporting. Well, he joins the show on Tuesdays. We had a spirited debate over Bobby Hurley earlier today. Catch that now on demand here at Robat TV as well. Catch us every day, 8 to 10 a.m. Of course, on Robat TV live as well with me and 17-year veteran Dale Hellestray as well from that perspective. And then, of course, the pit stop in hiatus right now comes back in February for when the racing season starts again. End of January, beginning of February. We're still waiting on those details on that lawsuit, some more details. So we're kind of paying attention to that. Follow me at a Pit Stop Talk, or the Pit Stop Talk is where you can find me on social medias. Also, podcast there as well. The Pit Stop Talk, find that out there. Then, of course, this show, as soon as we're done here, we get it posted up there for you at Robat TV. Join us, say hi, all of that stuff. Just a quick programming note. Tomorrow is Wednesday out there, the 17th. The shows here, ours two shows, will be dark tomorrow. So no McCollum on business tomorrow and no the main event tomorrow either. I got a personal thing. I got a dentist appointment I've got to get taken care of in the morning. Not for me, for one of the kids. So I will not be here tomorrow. And Dale, he's been summoned out of town for some NFL things that came up unexpectedly. So we are going to go dark on Wednesday. I'll be back on Thursday to get things rolling again as well. Uncle Lou will join me on Thursday on the main event as well. And then, of course, we'll get McCollum on business going again on Thursday as well. So just make a note. Come back on Thursday, would you? As we working through these holiday seasons and doctor appointments trying to get done and all of that stuff out there. With all that being said, let's get right back into that Market Watch. We talked about it earlier. The jobs figures report was delayed and it came in just not good, painted a weak picture of the economy out there. The AI uncertainties obviously still creeping into this market as well. Well, everything is down today. Well, except for one, and that's Bitcoin, even though technically it's down. Well, the Dow Jones right now is down 304 points, 48,145. The S&P 500 is down 28 points to 6790. The Nasdaq's down 52 points right now to 23,004. The Russell 2K, that small cap index, down 5 points, 2520 for it. And then you got Bitcoin there. It is technically up 1,500 points today, but it's still trading below that 90,000 at 87,974. Stocks we're paying attention to, well, we got to look at energy stocks today. First one we're going to look at is Halliburton out there. Halliburton is down 4.15% as of right now. Everything in this sector is tumbling down today, all down. Why? Because U.S. crude oil dropped to its lowest price since 2021, which means they're not making enough and as much money as they once did, and that's why they're coming down. West Texas Intermediate crude, well, it was as low as $54.98 a barrel earlier today. Traders are, dealing with both a surplus, but also a reduced geopolitical risk that's out there, meaning there's not enough wars and fights out there over oil to kind of make it unsure if you can get more of it. And there's also surplus out there. So oil prices are falling. Energy companies' stocks are falling as well. Halliburton down 4.10%. Another one we'll look at is APA out there. They're another oil giant company, 5.26% down for it. I can just tell you the whole industry here in terms of those energy names, all down today as of showtime earlier today. Next up, we're going to look at Estee Lauder. You know them, cosmetics out there. They are up today, 3.44%. Bank of America added Estee Lauder to its U.S. 1 list. The big deal there. And Bank of America, well, it rates the beauty company as a buy is basically what it means. It's something that you want to get in on is what that list is. They did deem Estee Lauder its top pick in beauty coming up in 2026. So some big confidence here from Bank of America in terms of an investment company coming up on Estee Lauder going into 2026. That's why they're up that 3.48% here today. Now let's get into some local stories here as we keep rolling on this Tuesday edition of McCollum on Business. And the interesting thing here, as we do a quick little follow up, if you're going up to the north or you wanted to go to the south rim of the Grand Canyon, you saw that story a couple weeks ago about don't come to the south rim of the Grand Canyon. At least you won't be able to stay on the federal premises. You can stay on the outside of it. But now hotels and lodges are going to welcome back visitors, if I can learn to talk, at that Grand Canyon South Rim. You can now go back up there. Obviously, the national park halted overnight stays for more than a week. Multiple breaks in that water pipeline that they've had problems with over the last several years. So, starting tomorrow on Wednesday, visitors, you can now stay overnight again at the El Tovar, the Bright Angel Lodge, Maswick Lodge, Delaware's North Yavapai Lodge, and even Trailer Village is now back open starting tomorrow. Some campground water spigots, well, they will remain off, so some of those might still be difficult. Fire restrictions at the South Rim, though, they will continue. The park first took steps to conserve water earlier this month, if you don't remember. They did that by pausing overnight stays. Well, they needed to repair breaks in the very old pipeline that delivers waters into the park, into those visitors, residents, and staff up there at the South Rim. Most Grand Canyon visitors spend their time over at the South Rim, especially this time of year. The North Rim does get shut down on that. But 41,000 of those visitors on the South Rim, they used overnight lodging last December for that. It's the second time the park has halted overnight stays, we told you before, and it's all because of that primary pipeline. It continually and frequently breaks out there. Remember last August in the summertime of the peak travel season? That was an unprecedented action then to close down the South Rim from overnight and everything and water restrictions. This time, at least, it was in the winter time out there. Maintenance of the 12.5-mile long Trans Canyon water line. Well, it's been a priority for a long time for the park to get fixed. They are in the midst of a $208 million rehabilitation of the pipeline and then upgrades to the associated water delivery system as well. That process began in 2023, obviously not moving fast enough to avoid some of these breaks and stuff. Park officials are still encouraging visitors, even if you go up there and stay overnight, well, to take shorter showers, wash only full loads of laundry, even turn off the faucet while brushing your teeth or washing your face. Save the water as much as you can. They're also telling you that hikers should bring or treat water, natural water, if necessary and needed, from those park rangers. So you're not out of the woods, still have to save some water, but you can now stay at that south rim of the Grand Canyon again starting tomorrow. Now let's talk about Grand Canyon University out there. Well, the U.S. Department of Education, they have now formally recognized Grand Canyon University as a nonprofit institution of higher learning. Yes, this is now official out there. The U.S. Department of Education, um, they've well, basically, I'm trying to figure out where to go because I was going to say Grand Canyon University was kind of like University of Phoenix in the past, right, with stocks and stuff. But now that it's officially a nonprofit, there's some big meaning behind this for the university. Well, this does align with determinations by the IRS that the Higher Learning Commission and the state of Arizona, even the NCAA, as they of course do the sports there, it does follow a 4-year, IRS audit completed in May. It's a unanimous U.S. Ninth Circuit Court of Appeals decision last year that did conclude an incorrect legal standard was applied in 2019 when the department denied GCU's nonprofit designation. Then earlier this year, that department rescinded a more than $37 million fine against Grand Canyon University, which, like I said, at the time was a private university. And that $37 million fine that was rescinded, it was originally charged because the allegations that it misled students about the cost of its graduate programs that went there. Of course, GCU President Brian Mueller did say in a statement this week, and he said that he appreciates the Department of Education's, quote, objective and thorough review of GCU's operations, unquote. He also went on to say, we look forward to working with the department in a cooperative manner moving forward, and being part of the conversation to address the many challenges facing higher education there. So now officially a nonprofit organization as opposed to a private entity that it was before out there. So big news there for GCUs. They've been trying to get that done there for a while out there. And here's a shocker. Our attorney general here is suing somebody, folks. Now, I get it. It's her job. I give her a hard time because she sues a lot of people, including the Trump administration out there. But now Arizona is joining a multi state lawsuit against Uber, yes, the ride hailing company. And the reason why? Well, allegedly deceiving customers about its subscription services. That was that Uber one out there. And this was all an announcement from Arizona Attorney General Chris Mays. 22 other state law enforcement agencies have joined a Federal Trade Commission lawsuit against Uber, and it's currently pending in federal court in Northern California. So, uh, Attorney General Mays did say massive companies like Uber will continue to take advantage of Arizona consumers with these ridiculously unfair and unlawful practices unless we do something about it. That was her quote there during the announcement. The complaint itself, well, it claims Uber misled customers by promoting its subscription service. As I said, that's the Uber One, is what it's called. They said they promoted that as a way to save money, overstating potential savings and even making it hard to cancel. And then they even charged people who didn't end their free trials and just automatically charging them. It also alleges Uber billed some users before their scheduled payment date, including people whose free trials hadn't even expired yet, and they went ahead and charged them. Mays did say she's seeking restitution, penalties, costs, and an injunction against Uber for allegedly violating Arizona's Consumer Protection Act and the U.S. Restore Online Shoppers Confidence Act, as well as what she is going after for this story here. So, yeah, it's I found it weird on that Uber one because I was always looking at it going, how can you save money? Well, they say you won't get, you know, surge pricing at certain times and things to that effect. And obviously, 22 states disagree with the way that they advertised that out there. And then finally, here, if you're living here in the valley and you're looking to turn, you want to get out of the city life, get into cheaper housing and things and a lower cost of living. Well, obviously you have a lot of choices here. You got Phoenix, obviously Glendale, Surprise, Mesa, if I'm just running around Apache Junction, Chandler, Scottsdale, North Phoenix. But there are three hot suburbs out there you want to avoid if you want that lower standard of life. Tempe, Gilbert, and Scottsdale, folks. Yes, avoid those three. Your cost of living will actually go up in those three suburbs of Phoenix. So, according to Go Banking Rates and their personal finance website, they found in a new study and it compared major American cities to their top suburbs out there. So people and families look to leave downtown cores for the burbs, right? We all know this. That allows them to trade in those one bedroom apartments for single family homes with backyards and pools and garages. But Go Bank Rates revealed 15 major cities that have a lower annual cost of living than nearby suburbs. So they relied on U.S. Census Bureau data. The company identified the 25 largest metropolitan statistical areas and examined the cost of living difference between the major cities and the three suburbs with at least 5,000 households and the highest liability index scores. For Phoenix, that's Gilbert, Scottsdale, and Tempe. Mesa, the largest suburb in the valley, was not included in the study. While in Phoenix, the median household income is roughly $77,000, the cost of living is nearly $53,000. So the cost of living in Scottsdale, Gilbert, and Tempe is actually higher, according to the study. Scottsdale has the highest cost of living at more than $87,000 a year. Gilbert's cost of living is more than $63,000, 10,000 more than Phoenix, by the way. And Tempe does edge out Phoenix on the cost of living at 56,604. So now there's not a lot of apples to apples here in terms of the comparison, because there's other factors. For instance, the median household income in Gilbert is 121,000. That's 58,000 higher than the cost of living. So, it's just Gilbert, people that live there make more money. Cost of living there is higher, right? Compared to other cities. Scottsdale's median household income is also 107,000. So obviously, the cost of living it beats that by 20,000 if you go off those numbers. So money doesn't go quite as far as Tempe. It has similar median household income, 77,000. But obviously, expenses put you pretty much at a break-even point there in Tempe. That probably has something to do with college kids in that Tempe area as well. So there's three cities that if you are looking to get out of the hubbub of downtown city life, which is expensive, and get out to the burbs, well, you want to avoid those three unless you want a higher cost of living out there in Gilbert, Scottsdale, uh, and Tempe out there as well. So little hinter for you for those of you graduating college here soon and want to get out of that Tempe area. Well, don't move to Scottsdale if you want an easier life in terms of living and cost of living from that perspective. And folks, I appreciate you joining me here on this Tuesday edition of McCollum on Business. Don't forget, tomorrow, the main event and McCollum on Business will be dark tomorrow. We'll be back on Thursday like normal. We'll get everything posted out there on the social medias to remind everybody out there. And we'll see you then, everybody. We'll see you on Thursday. Have a great Tuesday and Wednesday day.